Hello, everyone. Thank you for joining. I'm Jeff Sakasagawa, and I'd like to welcome Gil Akos, our CEO and co-founder of at Astra, and Emily Marshall, head of UK compliance at Atlantic Money. Today, we'll be discussing the role of identity in global payments and moving money across borders. We're going to explore strategies to ensure seamless customer experiences while staying fully compliant, incorporating essential concepts like KYB and KYC. So if you're here to talk about identity verification in the world of global money movement, you've come to the right place. Just general housekeeping notes. If you have any questions during the presentation, you can send them to us using the Ask a Question module on your screen. We'll try to answer and cover as many as we can throughout the presentation, or save some for the Q&A dedicated time at the end of the session. We will also be live tweeting this webinar. Enter obligatory joke or Xing. I don't know if that's what we're saying. But regardless of what you call it, you can join the conversation using the hashtag FinovateWebinar. With that being said, we'll do some additional notes. Just as a reminder, the sessions will be recorded. If you have any difficulties, please do send those along, and consider this my second appeal for questions. We would really love to hear from you. As it relates to agenda, this will be pretty light. We'll do some more deeper introductions to all of your speakers today. Get into the why of identity verification and payments. Why are we talking about this now? These are kind of like evergreen topics, but where are we at here in September of 2023? And then get into a deeper discussion. And then, of course, your questions. With that being said, this is the second time saying my name. I'm Jeff Sakasagawa. I'm the Trust and Safety Architect at Persona. I have a decade plus in fraud and compliance operations around Silicon Valley, what stops previously at Google, Facebook, and Square. And what I do at Persona is just help provide industry expertise as it relates to our end-to-end identity infrastructure. With that, I will take my first pause. Emily, hi, how are you? Could you give an introduction, please?
Hello, thank you. I'm Emily Marshall. I'm the UK Head of Compliance and MLRO for Atlantic Money, and I have been doing that role for about a year now. So I'm still relatively new to the world of payments, but I've got a lot of experience previously in UK financial services, mainly consumer credit and insurance. And there are a lot of parallels when it comes to the topic we're discussing today.
Perfect. And Gil, hi, how are you?
Hi, thanks, Jeff. I'm Gil Akos. I'm CEO and co-founder at Astra. I have a background in complex systems and optimization, and I've been working in the kind of payments industry generally for going on now 8 years. Really excited to be here. Thanks so much.
Thank you. Now, we wanted to do a quick double click. If you haven't heard much or would like to learn a little bit more about Atlantic Money or Astra, we're going to do a little quick deep dive here. Emily, can you tell us more about Atlantic Money, who you are, who do you help, what do you do?
Yeah, of course. So Atlantic Money is their only international money transfer provider that offers international transfers at a flat fixed fee and the current exchange rate for businesses and consumers. So we launched to private individuals last summer in 2022 and have recently launched to businesses. So now businesses can enjoy all the same benefits. We're a growing company, so there's always lots of exciting launches, expand into new countries, new currencies. Our most recent currency was launching payout to Indian rupee.
Perfect. Thank you. And Gil, could you do the same for Astra, please?
Absolutely. So Astra is a full stack payments platform. Our specialty is real-time payments, and that's writ large. So lowercase r, lowercase t, lowercase p. So that does include real-time payments in the capitalized format, FedNow, and all of the card rails that you might use through something like Visa Direct or MasterCard Send. So we've designed our system to bridge the gap between the identity layer and the product stack all the way down to the payment rails and provide a lot of value to enterprises looking to offer best-in-class payments experiences, and helping with the kind of implicit fraud and risk challenges that come along with processing faster payments.
Perfect. Thank you. That's a wonderful segue. As a practitioner, I appreciate, Gil, when you mentioned implicit fraud. I think sometimes I want, product managers and payments teams to dream big, but sometimes it's like, it's helpful to acknowledge like these things will happen. And it's just, part of doing business, but we can put something in place. To wit, what do cross-border and real-time payments have in common? When we were doing some pre-work for this webinar today, I think as a collective, we discussed 4 topics that seem to come up pretty regularly in our conversations that have mind share, that we need to dedicate resources or effort to. And Gil, I can't help, especially with the timeliness point. Sorry, I think recency, you're in my mind a little bit more when you're like little r RTP, like real-time payments. Timeliness is such a big thing with real-time payments. My terrible dad joke on real-time payments is like, what's your definition of real? But I think we can appreciate it's all kind of going more to as close to instant as possible. What's your experience been with the timeliness component, and what does that introduce to companies that they should consider?
Sure, and I think the trend that everyone I think is kind of tied into, whether they want to be or not, in the realm of fintech, is that time to money becomes the kind of #1 central measure for what that product experience is. So whether you are an operator of a big rig and you need to get your payment on Friday night, or you work at a restaurant and you want to take your tips and send those tips to your existing debit card, these types of use cases are super important, and kind of the expectation is that those funds should be available whenever I'm doing the work that generated that set of wages. So the expectation is super high. The set of payment methods are starting to emerge and grow and become more readily adoptable. But it does include all of the other things that every payment system requires to be addressed, which is both risk, compliance, KYC, KYB, and how you're addressing fraud. So it kind of sets the bar higher for what you need to accomplish as a product owner or an engineer in the space. But it also expands what you need to take on in terms of what your product stack is.
Yeah, that's such a good point. Jeff shares his ignorance on webinar talking point 1. I think as an individual, I really underappreciated that timeliness perspective. I remember, in like a P2P money app, I was always comfortable waiting like 3 to 5 business days for funds to settle, because I'm like, hey, this was just, Gil, Emily, and I went out for like tapas or something. So I can wait on this money for a few days. But as like a sole proprietor or something, like this could be payroll, it could be paying utility bills, purchasing inventory to fulfill your next order. So like if you kind of apply that real world, like human layer to the timeliness, I think it really translates to the sensitivity point you were talking about. And Emily, don't want to over-index towards the head of compliance title for a year, but when we think about different compliance regulations and Atlantic money being so international, there's obviously many things introduced by different country regimes, and trying to keep on top of interplay like cross-border. Do you have any general thoughts on just like how you tend to approach different compliance regulations? Like just how do you find what would be helpful for the audience to hear today, I guess I can say succinctly?
So I think being based in the UK and the EU, we have some of the most advanced money laundering regulations in the world. So we already have a really strong starting point. And I think so far, as we're trying to expand, we haven't really come across anything that's really surprised us and thought, oh, we've been missing that in the UK and the EU. But it's just about kind of getting to grips really quickly with the regulations of that country, and working out how best you can approach those to be compliant, but also you always have to consider the cost of being compliant and the customer experience, probably most importantly as well.
Absolutely. Yeah, that's always a push and pull, and it's a perfect segue. Oh boy. Sorry. What you're not seeing is me fumbling through the webinar platform. We've advanced the slide. Okay, we're moving on. So heading into our discussion, thank you, Emily. That was a perfect segue for balancing customer experience with compliance during money movement. As a framework for the audience today, we'll kind of walk through 3 separate chapters on diving into this topic, what general thoughts are from the panel. And then, of course, third appeal now, if you have any questions, if this conversation sparks something in you, we'd love to hear from you and perhaps dig into a little bit of those more. So digging into, just kind of like, actually, you know what, let me go back one, sorry. If we're just talking about that balancing customer experience with compliance point, Emily, I know one thing that I've really appreciated about seeing with Atlantic Money is just like the ease of like customer experience, right? Like, hey, there's a flat fee, I can send the money, and you just have an expectation that it'll go. But that external representation hides a lot of work that I'm sure you're doing internally. Could you maybe talk about like how you can achieve this through like what you're able to share with customers, or what you keep internal to your compliance org?
Yeah, so I think being a startup where we've had to consider compliance from the beginning, and compliance is kind of inbuilt into all of our processes really, and because of that you can ensure that you're building in the compliance requirements, but also ensuring that it's a really slick customer onboarding process as well. I think in the UK, it's all about a risk-based approach to compliance. So assessing the customer and applying the right level of due diligence for that customer's risk level. The vast majority of customers are very low risk, and we don't necessarily need to jump straight in and ask them to give us all of the documentation, the whole life story, and find out everything about them, because we can find out enough information to be satisfied that they're low risk and they're not money laundering and they are who they say they are, from less information. As many compliance people probably want to go and dive in at the deep end straight away, but you don't need to do that.
I appreciate the sentiment of trying to build in compliance from the onset. It just saves so much work down the line. I think another crude cliche I use sometimes is it's just everyone needs to eat their vegetables occasionally or regularly. So I think everyone knows you probably should do better here, but sometimes you don't see that necessarily applied at businesses. Gil, I know when we were kind of talking about this same topic beforehand, you had a similar idea from Astra, where it's kind of like technology that helps Astra's customers like build to manage risk too. Could you maybe share some anecdotes there on like how you kind of similarly support this balance between like maintaining your obligations versus like a positive customer experience?
Absolutely. And, I think in the background, in the industry, from a technology evolution perspective, so much of what we do or need to implement from a product perspective has become very, very easy, right? There are banking as a service providers and KYC identity providers, and implementing the APIs or the SDKs that go along with that from a technical perspective is easier and easier over time. The thing that is not that easy is the whole realm of your compliance program, right? And how you actually apply things, not just at the time of onboarding, but over time, right? So that the approach that you're taking from, in my case, let's say, or in Astra's case, from a payments perspective, is that everything is not happening just in isolation, right? If Gil onboards into the US-based version of Atlantic Money, let's say, and he's processing $100 today, and it's the first time he's onboarded. That's one case, and that's the base case. Then there's, okay, well, does he come back later, tomorrow, when, how often, how much? Like, these are non-binary questions that require a lot of upfront thought. And if you find a good technology provider or infrastructure provider, biased, but someone like Astra and someone like Persona on the identity side of things, you can start to apply those rule sets, tweak them, adjust them, and bring your product to market in a scalable and secure way while meeting all of your compliance demands, both upfront and over time, right? Like, as a new product owner, let's say, I'm going to launch something new. There's a series of things you have to do to get to live. And again, good infrastructure providers help you get live. And a lot of times the part that you have to spend the most time on is that compliance and onboarding step. But then it doesn't end there, right? And that's like, there's a lot of, you don't know what you don't know until you start to bring your product to market, where you have to, in kind of lockstep, enhance and evolve your compliance approach and infrastructure while you're starting to make sure that you're validating some of the other key hypotheses that are core to your product. So it's not easy, but there are ways to, from a risk-based approach, from how we model internally the user profile and tie that into what they do when, and have dynamic controls and limits. You can find solutions out there that allow you to bring your fintech product to market and grow it confidently without having like the, oh shit moment when we brought it to market, but we missed this piece of the compliance program and we have to like slow things down or, move all of our focus onto this one thing. And that can be really disruptive to a new product and what you're trying to accomplish as you try and scale it up.
Yeah, there's there's a lot of good things in there, so I'll try to keep my feedback brief. I really appreciate the isolation point because something I would always hear leave my mouth to like my team that would be performing an investigation or something to that effect is like, this is what we knew at this point in time. And we should have an expectation that we should be able to learn more, perform comparisons as more information, or to your point, Gil, like engagement with the platform, whatever form or fashion that takes, and I could have a different assessment like 30 seconds from now, or a day, or certainly a week or a month from now. So I really like that idea of reviewing in the moment, but still maintaining a consistency or a thread with which you can evaluate later. Emily, I'm sure you have thoughts on this too. Is there something you'd care to add?
Yeah, I just want to echo Gil's point on like the ongoing compliance program, and I think for us, transaction monitoring is so important. I think when you see ID and V, you immediately think onboarding, but that's just it's so much more than that. And certainly in the UK and the EU, you wouldn't be able to get authorized by the regulator without proving that you've got some kind of transaction monitoring in place to continually assess the customers. But again, that transaction monitoring is something that's continuously needing to be improved and reviewed, and checking that it's efficient and it's picking out the suspicious cases, but not generating too many false positives. It really is ongoing work.
Emily, I feel like you're doing my job for me, but I really appreciate that answer about transaction monitoring, proving these things to regulators or auditors, from the onset. I know when we were talking about our first question here about staying compliant with different AML regulations, you brought up an example of COVID lockdowns kind of forcing some creativity from companies to meet AML obligations. Could you kind of share a little bit of what you meant for the audience today?
Yeah, exactly. So I think Atlantic Money, as a startup, a fintech, we already have a trust in technology. We were able to build a really good system from the beginning. Whereas in previous experience of larger corporations, they've very much more hesitant to use technology as a solution. But I think my experience was that the COVID lockdowns, when suddenly we went from identifying and verifying a customer face-to-face to having to do it at a distance, it really made a lot of companies have to find ways to use the information that they were already gathering to meet the regulations and verify their customers that were coming through. And I think I certainly saw a step change and more of an embrace of technology. And I really do feel that that allowing some of these technological solutions is the way forwards. It's so much better than using the human eye, for example, to check a driving license or a selfie. I've got a great story of in a previous role long ago. We had a fraudster who was asked to take a photo holding a selfie, holding their driving license, and this driving license was absolutely no way belonging to that person at all. Yet they stood there with the confidence to say, yes, this is me, I've got my driving license. And that passed several checks, several rounds of people looking at it. But you just wouldn't get away with that with a solution like Persona.
Yeah, well, sorry, the chuckle is, I appreciate you sharing that. It kind of made me think about sometimes when my teams would investigate, oftentimes there are case notes, right? When you're investigating something manually. And I could just imagine seeing an investigator's note. License looks irregular, but person highly confident, pass. Just being mortified at seeing that logged and recorded there. Yeah, when I think about this same topic, about staying compliant with the letter of the law for something that may be decades old at this point versus where we are now in 2023. An anecdote I'll share is, sometimes at Persona, people, I'll say companies with a rich heritage, take from that what you will, what I mean by that. They kind of expect a Persona box. I'm sure this will make Gil's heart break a little bit, but it's they want okay, this is great. Sell us the Persona box. We'll put it in a server room somewhere and Persona will be deployed. And it's well, we don't sell a box. It's all in the cloud. How can I prove to you that this is trustworthy? Let me show you all our PCI and SOC certifications, all these things. And I noticed in recent years, some of these companies started coming back to us a little more receptive. And what they would say to me straight-faced is, I should look into the camera when I say this, they'd say, wow, well, I understand Persona doesn't have a box. We've come around to the idea of the cloud. We're not all in on the cloud, but we're into our cloud, our personal deployment of a cloud. And I'm okay, you know what? If that's the start, that's great. And then when you think about deploying one of those things, accepting more technologies, I think you'll find regulators are pretty receptive to you moving forward in this direction. It's just, again, how do you translate or transform security guards and safeguards that you had in place to this new environment? And I think that'll extend you, I shouldn't say a lot, but certain courtesies, right, from them. And again, they'll provide you feedback if you're really doing quite poorly on that, I would say. All right, progressing along. Question number 2, how can fintechs prepare for regulatory changes in the US and EU and new payment technologies as well? Gil, I know from an Astra perspective, this is something you keep in mind all the time, and not just providing the infrastructure, but making sure that people feel a comfort or a security in working with Astra. Can you share any thoughts here about how fintechs can do better here?
So I think there's a common perception that the newest payment method that's on the block that's come out recently is going to change everything. And I love that hype because it casts a positive light on payments writ large, but the the misconception there, I think, is that the payment method is not the solution, right? So like the method, you can like initiate a FedNow payment or a push to card payment. Like that's not the difficult part, right? That you can create the messaging that goes along with, all right, this amount, this payment method from here to there, right? That's pretty direct and straightforward. It's the stuff that happens upstream that is more of the challenge. And as the timing of the payment settlement on the technology to provide. So what I mean by that, he is onboarded through KYC and persona. He then connects a debit card to do a push to card payment, let's say, or his bank account. Then there's the payment initiation in the kind of loose and very simple product architecture. But that step of onboarding to payment instrument to then the payment execution, that's the part where the pressure is placed more from a faster payment side of things. So that means like you have to do more work to say, is this Gil? How confident are we that he is who he says he is? What risk level does he, what does his profile suggest in terms of a risk level? What kind of default capabilities should he have? Can he do as many of these transfers as he wants? Can he do a few of them? Can he do a lot of them or unlimited? What amounts? How much per day in a dollar or currency basis? And oh, by the way, is this Gil's card? Like, can we confirm that he has connected his card? And we link those things together so that there's user profile, KYC, payment instrument, and then payment. And those things all work holistically together. The reason I labor that whole stack is if you do it that way, or use a provider that does it that way, like Astra, then you are already like 95% of the way there from a compliance and regulatory perspective, because you've now linked the counterparty on either sides to a profile that you've onboarded and evaluated. You've validated the payment instrument on either ends of the transaction as well, and then you initiate the payment. So if you do all that, then you're like, okay, we start from a common foundation, right? If you end up that you do have to talk to a sponsor bank or a regulator, they're going to say, oh, wow, like we can now talk about this very narrow thing that we have a concern about, and you can work through it, as opposed to, okay, like we just are processing payments and we're not really checking all of those other things. And all of a sudden it leads to some maybe even not previously like understood edge cases that lead to additional downstream compliance or regulatory problems.
Yeah, I appreciate that. I think, again, Jeff introduces a very pedantic example, but I would always tell my teams, something to the effect of, hey, these transactions, this money movement, this engagement, again, whatever form that takes for your company has to come from somewhere, right? And so when you think about the risk-based approach, like you're talking about, especially with newer payment methods that are more real-time, more instant, your exposure kind of goes up because, hey, the potential just goes out, like all the courtesies that maybe a payment method that took longer to settle introduced from just like a timeliness perspective is gone, right? So like really making sure you do more of the work up front to know who you're working with and how they operate becomes really paramount in doing that. And Emily,
maybe just to add one more point, and I'll transition it to Emily.
Sure.
The thing that can be a big challenge is really when you're saying, all right, we want to use this new payment type. All right, this new payment method is RTP FedNow or push to card, which, by the way, all of the real-time payments typically start with push payments. Like we have the value somewhere, we're going to push them somewhere. If you go back in time in the US, ACH land, which is just a proxy for paper checks, and the whole settlement mechanism was designed around mimicking that capability, and a check potentially bouncing means a return code. There are settlement windows. When you had that lag in the time to money, 2, 3, 4 days, a compliance team or product team could actually build in some additional things that might happen in between there. Like, okay, Gil initiated his payment, but like, okay, we have a little bit of time, we're gonna do our investigation, whatever. With the real-time payments ecosystem, no. if you're doing a push to payment, push to card or push to account payment, those funds are there. They're gone. They're not in the account that they were before. So it means that you have to do more work and you have less fallback and fewer fallback opportunities to adjust course or manage what might happen if it is a non-standard use case.
No, I appreciate that. And I know, Emily, you had mentioned to us kind of facing that challenge that Gil's talking about, where a lot of what you've tried to do is build in technology from the onset in your role to help give your teams the best chance to do their jobs well, to manage this risk. Can you maybe talk through how you're thinking about AML and technology playing a part in that, and not necessarily something to be afraid of, but really seeing it more of a enabler for your teams?
Yeah, definitely. So I think we currently, to pay for a transfer, you pay using a local bank transfer at the moment. With us, that's one of the ways that we can offer such a low cost service, and we will not allow a payment to come through if it hasn't come from a bank account in the name of our customer, a UK or an EU bank account. So that is really protecting us from an AML point of view from the beginning. And that's going back to one of the earlier questions. That's one of the ways that we can take a risk-based approach. So we know that the money is coming from a bank account in our customer's name. So for smaller transfers, we don't necessarily have to go and ask for more information, like the government ID and the selfie checks, for example. But yeah, we really try in Atlantic Money it's a tricky balance to manage the customer experience, but we really try to kind of ask what we need for upfront so that we can know our customers as quickly as possible, and we can apply the highest possible account limits to their accounts, so we can so then once all of that is done, they have the smoothest possible journey and they can keep transferring, and we know that those funds that they're transferring are legitimate because we've seen the evidence. But again, bringing it back to transaction monitoring, that plays a part as well. So whilst we take a risk-based approach at the beginning, we may think someone's low risk, we may allow them to transfer. If something comes up that's a red flag, then we may need to step in, but we try to do as much as we can up front to avoid that.
Yeah, that definitely speaks to me because every I think fraud or compliance or payments people like Gil, you'll feel this pain of regardless of how you deploy something, it tends to invite criticism from your customers. They can be louder in some segments or not. So sometimes what I would hear at requesting a lot of information at onboarding is it's something to the spirit of, this is too much. Why are you asking for all this? But let's say we ask for less, and then we append an additional verification step to a particular money movement or a transfer. The criticism you get there is well, now you're holding it up. Why didn't you ask this for me when we started? So yeah, you're it's between a rock and a hard place, I suppose.
Really, really tricky. And you also get customers that are really happy to provide you with absolutely everything. Sometimes we get customers that are happy to provide 20 documents. They're all their bank statements, all their pay slips, their tax returns, and you're whoa, we don't really need all of this. But then you've got other customers that are very, very wary about sending stuff through, and it's a difficult balance because sometimes that can be seen as a red flag, oh, well, why don't they want to share the information? Is it because they're hiding something? I think in most cases it's because they're scared about sharing their information. But we simply just need to know that the funds that are going through our company are legitimately sourced. and there's no bad intentions. We don't have time to like look through someone's bank statement and say, oh, you went to that nice restaurant the other week. Like we're simply just looking to check that they're legitimate.
Yeah, you're not litigating, frequent stops at Tesco or something. It's like we have other ambitions. Yeah, so yeah, the why becomes really important. I feel like a lens with which I would hear that conversation framed too is like letting people know, like, hey, we're meeting a standard that applies to everyone on our platform. We're not isolating you based on any perspective. This is just something we do to ensure the security of our platform. So please don't feel like this is you being singled out. This is like something like all of our customers, depending on the mechanism, go through. Yeah. Gil, I know when you thought about this question in our pre-work, you kind of expressed this as a kind of a balance between like KYC, payments, and monitoring that can affect fintechs to different measures. Could you just share some quick thoughts there on maybe those three parts and what your thoughts are accordingly?
Definitely. So, I think the easiest way to kind of dive into that is actually dovetailing with what Emily was saying and Jeff, what you're saying before about like the balancing act that you have to strike between friction and information gathering and getting the information you need to have the appropriate inputs for your risk model, whatever that is determining, whether that's onboarding, yes, no, or step ups, or whether that's on the payment side, how fast, how much, and when. I think the thing that's most interesting to me and like the challenge from how to communicate the value of the technology that's being provided is that most of the value provided is the prevention of negative outcomes, right? So if you're a product owner and you're like, this is too much friction for our users, maybe that's because the context is you haven't had someone come through and trying to defraud you or your customers yet. It's because it's going to happen eventually. Or if you've actually felt that pain, you might be like, okay, yeah, it's totally fine. We understand. This is going to help us reduce some losses with chargebacks or ACH returns or whatever it might be, so that we can actually grow our business more sustainably and reduce those costs that come along with doing business when you have payments embedded in your product. So I think it's like the trade-off on both, but you have to say, okay, well, if we don't have enough information, then you're going to have more friction, which is bad. But if we don't take enough information and we let users on the platform and then there's some negative outcome, that's also bad. So it's like the balance that you have to strike to be able to show like, hey, well, our approach is we'll show you the performance of our platform and how few times these negative outcomes actually happen, such that and match it to the increased onboarding funnel percentage, right? So like if you can provide the performance on both ends, preventing negative outcomes and producing a positive and low friction onboarding experience, you're in a really good spot to be able to communicate, whether it's to the end user or in our case, because we're B2B2C as an API business, to our customer who is the product owner.
Perfect. And with that, we'll head into our third and last discussion question. Consider this another appeal. I've loved the discussion so far. We'd love to hear from the audience. Please send any questions along if you have them. We're going to prognosticate a little bit about some emerging trends that might shape the future of global payments and identity verification. I think my oversimplification is we're still really early in on this. I like just things I tend to think about, especially from a payments context. Gil, you may appreciate this. It wasn't that long ago. I think the thing that had mindshare here in the States, at least, was just like the card not present liability shift. And it's like, oh my gosh, like, wow, chip cards in the States. Here's where Emily's eyes start to glaze over, like you Americans, like, wow, chip cards in the States. We couldn't do that, right? We did chip and SIG, not chip and PIN. So whoops. And now, stateside, a lot of traffic is around open banking, real-time payments, FedNow, like Gil talked about. And again, Emily's like, okay, we've been doing this for a while. But what I think this is a good expression of is not just to denigrate the state of the Americans' payments ecosystem, but like collectively, to get parity everywhere, like we still have a long way to go. When I worked at Square, I'm thinking of this just because, there's a big Apple iOS update this week. At the company, at the time, you would just find people like super interested in like, oh, what's the new iPhone features? What's going on? And I find it curious in recent events, in the latest iOS version, there's a concept of like doing more with like mobile driver's license, like a digital representation of IDV. And so like when you get Apple kind of playing with that more, even though they introduced the feature, I think like a year or two ago, they're like really pushing in on it. I think that'll kind of drive a lot for us, right? So still early on, but you're starting to see momentum from like the like top 3 largest company in the world starting to push it. We'll kind of get swept along with that. Emily, I know you mentioned you might have some thoughts on digital IDV, so I don't want to take too much from you, but that was my quick preamble to things I'm kind of seeing and what it sparked in me.
Yeah, I think digital ID is definitely something that's up and coming and is going to potentially like change things for the better for the customers as well. So I think our current persona solution is pretty slick as it is, and there's still, but you can still, if you are determined enough fraudster, you can still get through that. There's still a way through, but I think with digital ID, it's going to be a lot more secure, or certainly the work that's going into it in the UK means it's going to be a lot more secure as well. So I'm really excited to see what the solutions are going to be around that. I think at the moment it's digital ID is actually being mentioned in some of the regulatory guidance as well, which is really exciting. And that'll mean that certainly in the UK, more kind of big corporates are willing to get on board with that kind of technology as well, because I think that's part of the battle. As a fintech, we're quite nimble, we're willing to try new things and can quickly adapt to them. But it's such a huge, like payments is such a huge industry, and everyone's kind of got to get on board with some of these topics to make them successful.
Yep, absolutely. Yeah, I know the European Commission has kind of put out some publication or early thoughts around the concept of like a European digital identity. So especially stateside, as a lot of our regulatory, whether they actions, whether they be federal or state-based, tend to follow a lot of what the Europeans are doing. I'm very curious about that. Gil, same question to you. What has Mindshare with you when you think about emerging trends that will shape payments or IDV respectively?
Certainly. So with the launch of FedNow just a couple months ago here in the US, which is like the most recent in the lineage of real-time payments that are kind of rolling out and starting to be adopted here domestically, there's been a lot of conversation around how those payment methods, specifically FedNow, compare to things like PIX and UPI. And so those are in foreign geographies, Brazil and India. And I think the thought exercise is interesting. But the one thing I think to note that is underrepresented in the conversation is the DNA of the respective financial systems is very different, US versus Brazil and India, in terms of the lineage, how long the financial system has matured. In the US, it's been around for a couple hundred years now, so there's a lot of built-in things to the financial system here that have made it successful and support a lot of commerce and enterprises growing here in the US and abroad. But it comes with some of that legacy infrastructure or premises that are bound to how you can implement those payment methods. So specifically in India and Brazil, there are fewer financial institutions, and the real-time payment methods are more closely linked to your federally issued government identification. Here in the US, we have a heterogeneous payment system. There's ACH, there's wires, checks, still a little bit kind of,
Yep.
RTP, FedNow, card rails, all of these various payment methods are used in different use cases. And there is no overriding federal government identification system, and not even at the consortium level across states. So it leaves it to the product owner and the companies that are trying to roll out or implement these new payment methods to kind of stitch all that together. Now, again, like that's some of the origin story for Astra, and why we did it is like, well, we want to be able to go from any point A to any point B, any payment instrument to any payment instrument, any counterparty, any rail. And that requires you to put all of those pieces together and link up the intermediate elements from identity, payment instrument, and rail. So I think from a payment architecture perspective, the other payment rails, payment methods, UPI and PIX, they can start from the top and go down, and then you have the ability of a secure real-time payment. Versus here, there's kind of like, okay, we have to start at the rail and then build up the payment instrument and the identity thereafter, and put all those things together. So it's a super interesting. I think it means that we can do maybe more diverse things here in the U.S., but it comes at the expense of we have to do more work on our side for every company that's wanting to roll these out to be able to make it work functionally the way it's intended.
Yeah, it's I was going to make two Brazilian payments jokes, but when you're talking about like PIX and federal investment, that's such a meaningful part of the success of a lot of those metrics they're shopping around, is how much that's being supported by the government. I was going to say any payments person worth their salt has generally had some kind of project that says, we're going to Brazil, Gil, we're doing it. And the second is like a deep dive into the boleto. So it's like, I feel like I've heard those 1,000 times in my career. But, I'm sure those will be replaced by PIX if they haven't already. But more professionally, less jokey, I really love that framework of, especially in the States, we're used to things that are more market driven, right? It's like, hey, well, there's a lot of players. Let's see where it will go. And I know, Emily, what a lot of we had talked about is, a lot of EU stuff is regulatory driven, right? Where it's like, hey, we're going to adhere more to the letter of the law and like let that provide direction. So, when you're thinking about emerging trends, that could be an interesting lens for everyone in the audience to consider, is like where you're operating. Is it more market forces at play, something you tend to see more in the States, or more like regulatory driven and something we need to adhere to more specifically? Perfect. With that, I'm going to advance to some key takeaways we have before we get into the Q&A. This one is kind of a counterintuitive thought, but I wanted to, Emily was the genesis of this takeaway for me, because when we were planning for this webinar, what's a kind way to put this? Maybe I was a little more cavalier in my compliance statements. Emily, being a great professional, head of UK compliance, was like, Jeff, maybe that's not how I would necessarily run it. So in that spirit, regulation can help speed up real-time payments. So sometimes if you're kind of having Jeff at the wheel, sorry, future employers, maybe it's a little more jokey. It's like, hey, let's deploy, figure out, iterate over time. Conversely, if you have regulation and stick to those, it kind of gives you a framework in providing the answers already, right? Like, hey, not that I'm trying to starve off creativity, but let's meet these obligations. This will give us, I think, Gil, you had a great anecdote in the conversation where it's like, let's address these big problems at the source so these don't become problems, and then address smaller, finite feedback over time. That's really what I think about with this key takeaway. Really lean into the regulation. Don't see it as much as a burden, but like, hey, if we adhere to this, move to this quickly, then we can go. But like, let's do this first, get this out, and then, we can think about other things down the line. So thanks both. Yeah, I think you're both, creative part for my key takeaway. Emily, I'll hand it off to you. Can you walk us through your key takeaway today for the audience?
Yeah, for me, it is that a risk-based approach is always best. And it's always best, in my view, from the point of staying compliant, from the point of keeping costs down, and from a customer perspective. So first, staying compliant. That's what the regulator wants in the UK and the EU, to take a risk-based approach, but it also means that we can really focus on the riskiest areas and take action and pick up on red flags quicker, because we're not just trying to do all the compliance on all of the customers.
Yeah.
From a cost perspective, it's clear that if you only really do the enhanced due diligence on the riskiest customers, it's not costing as much as well. You're not spending as much time, and you're not spending as much money. And then finally, from a customer perspective as well, a risk-based approach will mean that for the vast majority of genuine customers, they have a really smooth onboarding and experience with us. And it's only really those customers where there were key risk indicators that have to go through or go over some extra hurdles. That's my takeaway.
Yeah, that extra hurdles point is really salient, because I think a lot of times when, as a compliance person in seat, people feel those additional hurdles, to use your phrasing, are applied unilaterally. And it's like, no, that's not the case. If we kind of have some indicators or use a risk-based approach, like you're saying, that will apply where appropriate, not everywhere, right? So really important to set that context. Gil, I'm scared. Icebergs. Could you explain what you mean by that? Why should we be weary outside of just like normal icy things?
Certainly. So the background for this is that there are two paths that we've seen for our customers as they grow. And the typical path up front usually starts with, okay, I need compliance, KYC, a bank partner to be able to process payments. And those are the things that you need. And you start there, and then if you can iterate through and figure out things over time, but that is the more painful approach, because the iceberg problem that is around financial services more broadly, and specifically compliance and payments, if we're going to narrow into those two topics or parts of the product stack, is that you don't necessarily know what you don't know. And it's scary down there. So the deeper you go, the more treacherous it is. And that's where you can get into a lot of trouble. And perhaps your growth curve looks a little bit like a sawtooth as you go, because you have to adjust course, navigate, re-engineer, refactor, tweak things. And that can be a very painful full product, versus like, I have this great idea and we brought it to market and I want to grow it. So if you start to interrogate what's below the surface of the problem statement and the product you're building, you're going to have the second path, which is much more streamlined and less painful. So beware of the iceberg problem. Tactically, if you're looking at vendors that are providing payments or compliance, ask questions like, what am I not asking you? What are we going to run into in 3 to 6 months after launch? And their answers are going to be really indicative of, are they going to help you solve the iceberg problem? And you're not going to have to deal with that as much, and you can grow and focus on your product and growing your business? Or are you going to have to spend a whole lot of time building additional layers of the product stack to be able to complement what you're getting out of the box?
Perfect. Bill said the magic words, ask questions. We're going to progress to Q&A. We've had a couple come in. Emily, the first one looks like best addressed by you. How do you navigate working with sponsor banks, especially as you're expanding geographically? Any thoughts or things you could share there?
Yeah, I think one of the biggest things is to have patience. Often the banks are a lot more slow moving, and they're not going to be making instant decisions. So you need to kind of have that expectation to begin with, and then you'll probably feel a lot better about the whole thing. But it's the same as expanding to different countries. So in our case, we're usually looking for partner banks because we want to expand to a different country. So it kind of goes hand in hand with doing that gap analysis on what are the regulations, what are we currently doing, what do we need to do? And then you've got that extra layer of, well, what are the regulatory requirements for that, for the country or the currency that we're looking to expand to? Are there any hard requirements of that, of the particular bank that you're talking to? And is there anything that actually you can flex a little bit as well? And it's just trying to, again, work with what we're currently doing, see if we can meet the requirements or like quickly be able to make changes to meet those requirements. But yeah, there's a lot of toing and froing and appreciating that often you're coming from very different cultures, I would say, different approaches.
It's a very polite answer. I would say, to kind of continue that theme, presume positive intent. You're both working towards the same North Star of wanting to, ensure a safety and security of what you're doing. People express that differently, but if you can find that common pool of positivity, hopefully that'll get you through the to and fro, let's say. Yeah. Gil, question for you. What does it mean to be quote unquote institutional grade, and institutional grade payments app, both from an infrastructural and compliance perspective?
Yeah, so I think that the reference really is pointing towards institutional grade. Are you at the level from your compliance infrastructure and program that you're operating as a financial institution, as a bank? So like, are you on par with what an actual financial institution might be operating in the compliance landscape? On the other side, there's similarly, someone might say enterprise grade. What does that mean? Well, that's like, okay, this system is ready for scale at the beginning and over time, and it gets better with scale. So I think we at Astra, we take a kind of compliance first mindset, even though our primary focus is payments. We have compliance and regulatory requirements. And so we try and maintain the institutional level qualitative measure operationally, and the enterprise level measure by way of the scalability and performance of our technology, right? So like, you want that in a partner, again, whether this is like compliance or payments or an adjacent service that you're gathering from an infrastructure provider, because it means that if they're already operating at scale for enterprises and already operating at the level of a bank, your bank partner that you work with is going to be happy that you're using Astra, and you're going to be happy as you grow because the system is going to continue to deliver value to you.
Perfect. That's a perfect end to our conversation. Let's keep it happy. Let's do it that. Thank you for joining us. That's all we have time for, I'm afraid. But thanks again so much to Gil and Emily for your time, your thoughts, and to everyone who tuned in this afternoon. We look forward to hearing more about how these trends may develop. If you have any feedback on today's webinar or any recommendations for future webinars, please do complete our short survey at the end of this webinar. It should flash up on your screen shortly. And lastly, it's been a pleasure, I can say for Gil and Emily both, to bring you this webinar. So do keep a lookout on the Finovate blog, for the recordings of this and all other webinars and new thought leadership content that is updated regularly. Thanks again. Hope to see you soon.